Welcome to this week's ASX edition of Trade the Trend, a weekly video discussing where the stock market is heading. Today, in this video, I'm going to be focusing on the ASX200 and commodities. You'll find a video on the S&P 500 in a separate video, and I'll leave a link to that in the description section below. And as always, this is general commentary and doesn't take your personal situation into account. All right, let's jump to our first chart. So we've got the ASX200 on the screen, and like the US markets, it's been a relatively quiet week for the ASX200. I think the key feature on this chart is this big resistance band which we have between around, let me just find it here on the chart, around here, around 6,900 to 6,750. So this is a key resistance point that we have on this chart, and I think whilst the ASX 200 remains beneath it, it remains vulnerable. It remains vulnerable to further weakness, and we've also got the moving averages which are worth noting. So we've got the 100-day and the 50-day, and they're both continuing to decline, and the price remains very much below those moving averages. So technically, the ASX 200, it's in a weak position. It's butted its head up against the underside of this resistance band, and so far the resistance has comfortably held it. So the market does remain vulnerable at its current levels. I want to put on some Fibonacci retracement levels. So I'm just going to use the most recent decline and do the Fibonacci retracements on that. And when we do that, measure that out, you'll see that this rally that we had recently, a couple of weeks back, didn't even get back to the 50% retracement. So I think that's that is concerning. It's concerning when the market bounces in a resistance band, doesn't get to the 50% retracement, and then starts to retreat. So we've got this situation where we've got heavy overhead resistance and a Fibonacci retracement zone capping the market. And I think until we can see the ASX 200 find its way above around 6,900 up towards 7,000, I think we need to remain highly defensive in the way that we approach this market. And I'm wondering how this current setup in here is going to play out, how the market is consolidating. It looks like it's starting to coil. And one of the possibilities that could happen is it could end up forming something like a triangle trading range. So just sketch something in now. We don't know how it will form out, but this is a possibility that we do see a pattern like this start to develop, and then maybe it continues within here for another week or two, but then you could get breakout to the downside of the pattern. So that's one of the risks. The risk is that we do, if this sideways motion continues, that this is just a consolidation before another leg lower. So it's one of the reasons why I think we need to remain defensive. That's not a prediction that that's going to happen, but it's certainly a possibility with a decent percentage of playing out. Now, on the surface, it looks like the ASX 200 isn't doing that badly when you compare it to some of those global markets. Like the US markets are down somewhere between 20 and 30%. But the ASX 200, well, it's only down about 16% from its high. So it's doing relatively okay, and it's not officially in bear market territory. But a lot of the weakness, I think, within the ASX is being masked by a few big cap stocks like VHP and CBA. And that's because the ASX 200, of course, is a capitalisation index, which means that it gives a bigger weighting to the larger stocks. So what I want to show you now, I want to show you another index which takes that capitalisation factor out. And this is the ASX 200 equal weight index. So what this is doing, as the name suggests, it's weighting each stock equally. So the bigger stock and the smaller stock in the ASX200 have the same impact on the index. And when we do that and we measure the decline from the high to the low, get a decline of about 24%. So from that measure, this is very much in a bear market, and you can see it's been a lot weaker than the ASX 200 capitalisation index. So look, we're seeing a rebound. We're seeing a bit of a rebound over the last couple of weeks from pretty much really oversold levels. See how far the prices dropped below those moving averages. So it did get quite stretched. And it's a bit like an elastic band when it gets so far stretched from the moving averages. It does want to have that tendency to want to rebound and recoil back towards the averages, which we're seeing at the moment. But at this stage, I think we have to assume that this is a bear market bounce. And we just look at like how this could play out. And one of the possibilities is we're getting some sort of a flagging type pattern developing in here, where maybe it's just maybe, of course, maybe the market trades sideways to upwards in this gentle upward range, and then it falls out of the pattern and makes a new low. That's the risk, I think, with the market and the vulnerability. Similar sort of pattern occurred just over here, which is these are typical patterns, classic patterns that you see within declines, where the market goes down, goes into a flagging pattern, then declines again. Maybe that's what we're seeing now. So again, it's why I think we need to be very careful and very defensive with this market, just because of the way it's setting up. And I think an added risk for the Australian market is this week's breakdown in commodities, as a resource sector really has been a key support for the local market. And it's one of the reasons why the ASX 200 has been holding up so well, because you've got stocks like BHP and Rio doing okay. They're coming back, but they're not falling away like some of the tech stocks are in the US. So that's been bolstering the local market. This commodities breakdown we've just had, that is going to put a weight on the market. So I'm going to jump over to commodities in a sec, but first of all, if you're getting some value from this, please hit that like button and maybe leave a short comment. Just, hey, thanks for the video, helps a lot. Let YouTube know that people are watching, people are engaging, then YouTube's more inclined to show other people the video, and it really helps me so much. So please do that. And if you haven't yet, subscribe, hit the subscribe button, and also come over to my Motion Trader website and see all the free stuff I've got over there, which can also help you develop your trading skills and your ideas. And come over and do that, motiontrader.com.au. All right, so let's go over and have a look at what commodities have been doing. So this is the Bloomberg Commodity Index, and just in the last few days, commodities have gone from, just in the last few days through here, commodities have gone from what started off as quite a just a moderate sort of pullback to quite a significant correction. And really, in just since the start of June, this is a 20% decline. So it's also one of the quickest sell-offs that we've seen in this commodity index since it started tracking. So it's quite a significant development, and it's widespread. It's across most commodity classes. So it's across the metals, like industrial metals and precious metals. It's across the grains, wheat and barley, softs like corn, and even energy. Like energy's been one of the strongest components of this index, and energy still remains relatively strong, but even it's been pulling back. So just looking at this chart, there's just the extent of this fall. There's been a lot of technical damage done particularly in the last 4 days. You can see just through here where it's rapidly declined. Has had a slight rebound, but in the scheme of it, it's still like a lot of technical damage has been done, and I think it's going to take time. I think it's going to take time for this to form a base and start to potentially turning higher again. We've also got the breakdown below these moving averages. The 100-day and 50-day moving averages now are rolling over and look like they could cross in the next week or so. I still think there's a really good medium to longer term story in commodities. So when we look at this on let's quickly just look at this on a weekly chart. We can see commodities are still coming off low levels, but that is such a strong rally we've had over the last 2 years. It's only normal for the market to pull back, and these pullbacks take time. A consolidation in commodities could go on for the rest of the year, and we could see lower levels. Maybe the market bounces and it comes back and it chops around. Who knows how it plays out? But big moves require corrective moves, and they take time. So I think the longer term story is great, but given the extent of this breakdown, I think it's commodities now could become a drag on the ASX, at least over the shorter term. And I think that when we even just let's have a quick look through some of the commodities. So look, starting with iron ore, which is going to really impact BHP and Rio and Fortescue. We had that classic rebound, and this is interesting, putting the Fibonacci retracements on iron ore. You can see the rebound, the recovery after that big decline that we had. The recovery came right up into the Fib region, and now it's rolling over again. And you can see it, the current price down here, moving averages have crossed. We're below the moving averages. The momentum has shifted to the downside. That's going to put a lot of pressure, I think, on BHP, Rio and Fortescue over the next few months. Jump over and look at gold. And I haven't covered gold for quite a while because there's been nothing to talk about. Last time I covered it was through here when it broke down. And I said, look, gold has broken support. It's now time to stand aside and let the price action show us what's going to happen next. And what's happened is it's continued to weaken. Couldn't get through this resistance band on the rebound. The moving averages have crossed, and it's actually broken down again just in the last week. We just draw a trend line through there, and there's it's really one of those flagging patterns I was talking about a moment ago in the ASX. Had the decline, had the flagging move, and now we're getting the decline. Next stop for gold is this support band down here at around 1680. Around 1680. I think it's quite likely gold's going to test this, could even dip below it in the weeks and months ahead. It's very much lost all upside momentum which it had during this period. Looking at copper, another one, it's really below those moving averages. It's so stretched, copper could have a rebound. It's an interesting one to talk about on its own in another video. But you can see a lot of technical damage done. It's going to take time for it to base and to potentially turn higher again. So that's kind of the general pattern across all of these commodity markets at the moment. And the key feature for all of them has really been the surging US dollar. We've got this general risk-off environment, negative sentiment, lots of talk of recessions. And so, look, unfortunately, I think that's just the weight on the market at the moment. I think there's going to be some great opportunities when the dust settles, particularly in this commodities sector. And copper's one of the ones I'm really watching with a lot of interest. But I think for now, I think it's not a time for taking big risk. I think we need to keep our powder dry. We need to wait for the price action to suggest when it's time to get back in. So, the message from all this in the local market is keep your powder dry. There's going to be opportunities, but price action will tell us when the time is. And part of these bear market periods, it's all about protecting your capital. We want to make money, of course, but we want to make it when the time is right. When conditions aren't suitable, we need to protect capital so we're ready when the conditions do turn, which they invariably will. So let's leave it there for this week. Please give me a like. Please hit that subscribe button, leave a comment, and I look forward to coming back, talking to you next week. Thanks for joining me.